Thanks for joining us. I'm Marlon Bowling with you on a Tuesday, Crop Progress Tuesday, we like to call it. Here's a look at the cotton condition ratings from USDA that came out yesterday afternoon. And we had the Texas cotton crop coming in with a good to excellent rating of 27%. You know what it was last week? It was 22. That means we picked up 5 points in 1 week's time in Texas. Georgia came in unchanged at 69% good to excellent. Mississippi went down 4 points to 69%. Alabama down a couple of points to 84%. So they are still very good shape there in Alabama with 84% good to excellent rating. North Carolina down 4 points to 56%. Good to excellent. I wanted to touch as well on spring wheat harvest conditions and get you updated there. Nationally, we have 77% of the crop already out. The 5-year average, only 61%. It is amazing how fast the crop has progressed this year on the corn and soybeans and even on the spring wheat after such a late start. South Dakota is 97% complete, Washington State 71%, Minnesota 94% done, Montana 61%, and for good measure, North Dakota 77% done, and Idaho 67%. On the grain trade today, we have had a little bit of weakness showing up in some of the commodities. Right now on the corn, we are down 1 1/4 pennies at 345.5. On the soybean trade right now, we have had significant weakness. September down 8 1/4 at 826.5. And in Chicago wheat, September is now trading 2.5 higher again at 501 3/4. It's been above and below water. Brian Hoops joins us now. He's with Midwest Market Solutions in Springfield, Missouri. So, Brian, your take on the early market action in the grain trade today?
Well, you know, the soybean market's finding a lot of weakness in here. Crop condition ratings improved instead of holding steady or declining, and that tells traders that, you know, this rain and cooler temperatures that we received over the last week is really improving the health and likelihood, the yield potential of soybeans. We've also had quite a bit of selling in soybean meal futures falling to fresh contract lows, and that's pulled the soybean market along with it. So there's very little fundamental support here for any of these markets, corn, soybeans, wheat. As we go into the harvest time frame for corn and soybeans, it's going to be harder and harder to find some of that bullish news to give us a catalyst for a rally. Right now, best we can come up with is, you know, kind of a technical bounce after several down days in the wheat market.
We had an overnight sale announced, and it was all soy meal, and it was all to Mexico. It was split up into 2 different marketing years, but in all, it was just under 200,000 metric tons, and yet the market is lower today anyway. What does that tell you about the underlying weakness fundamentally in that soy meal trade overall?
Yeah, you know, it's a pretty clear indication that if the market can't rally on any type of bullish news and falls to contract lows, it's a pretty weak market, and that's exactly what we're seeing in here. We're seeing soybean meal contract lows, and it's dragging the soybeans along with it, and it may be just a matter of time before we start seeing contract lows in the soybean market as well. So it's going to be very tough when we get into the last part of August and into September here. Very tough to find bullish news to give us a rally. Now, you know, corn markets should react to positive export news because we have such a strong demand base already, and any more demand news will be positive. And I would not be surprised at all to see agreements with Mexico translate into increased purchases for soybean meal and also for corn.
All right, and I did hear corn made 6-week lows yesterday. Brian, we'll come back in a moment and we'll talk livestock. Our guest, Brian Hoops, don't go anywhere, and we'll be right back. Well, thanks again for joining us. Right now, we're going to take a look at our livestock trade, and it's interesting to watch this live cattle market open up basically about steady, maybe a little bit easier, and then kind of slide away about a half hour into the open today. Here's a closer look on the live cattle futures for you. We have October down $1.48 at 107.82 per hundredweight, and December down $1.75 at 111.90. And if you look at feeder cattle, on the feeder cattle board, we have September down $2.33 now. We're at 148.35 per hundredweight. That's about 40 cents off our low of this morning, but it is pretty far away, almost $3 now off of our early morning high. October feeders down $2.50. We're at 147.57. Lean hog trade this morning. That's the one that had the big reaction yesterday after the Mexican trade announcement, and it had a limit up close. Not today. We have the October lean hogs. We're down $1.78 at $53 now, and that's over $2.50 off our early morning high. December down 75 cents at 53.47. Yesterday, that was your strongest contract. We go back to Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And Brian, on the livestock trade, we started out kind of holding their own early this morning, but wheels quickly came off. What happened there? Do you know?
Yeah, there was really not much of an announcement yesterday, just that we reached an agreement with Mexico, but no details. And market had rallied, anticipating we're going to see a lot of export business of beef and pork products because they are already such a large buyer. But without any details or confirmation of what exactly they're going to be purchasing, we're left with looking at big supplies of not only beef but also pork to contend with. And I think we eventually will get through some of those supplies, but today's reaction is to go back and trade maybe more of those fundamentals that are known and not what is unknown at this point. The positive we see in the cattle market, October gain against the December contract, we think that'll probably continue as we're through the biggest supplies of this summer in here, and we're kind of gearing up for some Labor Day grilling demand.
Have you seen any rumblings of cash cattle movement today or not?
We haven't heard really anything yet as far as any bids or asks. The show list numbers are about 3,000 heads smaller than last week, which is a supportive feature to the cash, and we're also about 11,000 heads smaller than a year ago at a time when supplies are expected to be above last year. So again, that's a supportive feature to the cash markets, and we should be pretty well supported throughout this entire week.
All right, thanks, Brian, for the insight into the markets. Brian Hoops of Midwest Market Solutions in Springfield, Missouri.